Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Danish Rizvi of ASA Ventures. And Danish, thank you for joining us.
So thank you, Hall Martin.
So what was your background before investing in early stage companies?
Well, actually, I have a 20 years experience in banking investments. Started off in logistics, supply chain manufacturing, but very quickly moved into the banking industry. This starting off was doing the risk management side, looking into SMEs and the corporates. Then actually I was very heavily involved in the investment banking, corporate finance side. Did private equity transactions, M&As, was involved with trust transactions and fund structuring, strategic planning and development. So that's where I was. I moved into the VC side, I think, full-fledged last year. Prior to that, I was, definitely advising ASA Ventures in terms of the governance and structuring side.
Well, great. So what was your reasons for moving from investment banking to venture capital?
Well, there are many reasons to that. When I was in the investment banking side, every industry and market keeps on evolving. And since last 10, 15 years, the market industries, the financial sector has been evolving in such a way that the interest of investors has been a lot towards the alternative investments, the real estate, passion investments, private equity, hedge funds. But there's something which was very much of interest was the venture capital, which, it was something that was quite unexplored, especially in this region. When you talk about the Middle East and you talk about the GCC and the emerging markets, the venture capital space is something that I saw there was a huge opportunity. So, and that's one of the major reasons that I felt it brings a lot of value in terms of moving into the space, because it was the right time to penetrate and make an impact. I saw it's a great opportunity. The market is more dynamic in terms of investments. Investors in the region are learning leaning towards, but there are many other options or channels for them to go through. There is a gap in the Middle East market in terms of VCs. The industry isn't as developed, as I mentioned. And that's why it's a lot of scope and potential that we can actually capitalize on. So that's one of the reasons, and actually major reasons that actually I moved over here. As far as the pros, if you're looking at the pros in investment banking, which really helps you in this side as well, is when you're in the investment banking, you learn a lot about the best and optimal ways of structuring deals and transactions. The creativeness that you develop in financial structuring, in mergers and acquisitions, help you learn so much more than just the financial side of the transactions. The relationships that you develop and the trust that you developed over time with the private and institutional investors. So understanding the dynamics of the market and what affects the movements accordingly. So these are some few of the things that you actually learn in the investment bank. But as far as the downside of investment banking is concerned, there's always limited appetite for risk taking. Because the way that in banks work, the financial institution works, is we're very restricted in terms of the type of deals that we actually onboard. And normally VC type transactions do not fit that well. So that's on the investment banking side. As far as the pros and cons for VC, there is, definitely an opportunity to making exponential returns. You're talking about 10x, you're talking about 20x. However, the downside is always there. You can lose your entire capital. But then again, there's a huge impact that you're actually making to the society, countries, and economies that you are focusing on. Because you're actually bringing in creative solutions. You're supporting the startups and the businesses that may change and evolve the behaviors and create bigger markets for niche segments. These are some of the things. And then you're actually enabling the development of innovations in technology sectors. I believe, the VC is doing a lot more for the industries and economies, especially the entrepreneurs. If you look at the UAE itself, you're talking about more than 70% of the economy dependent on the SME sector. So which means that we need a lot more development, which is required on this sector, and where the VCs actually play a great role. But the cons, definitely there's a very speculative nature of business that we have as being a VC, but high risk, high returns. I think this is one of the reasons. But when you talk about the region itself, I mean, the best way of going through it is if you do a SWOT analysis of it, right? And when you do a SWOT analysis of VC industry in this region, it's kind of not very right to compare with the West itself, because if you see US, I mean, you have numerous incubators, accelerators. The number of VCs are high. The angel investors are there. There's a developed perspective on risk taking on startups. And on the startup side, I mean, these things are already there. But as far as the UAE and this side of the world is concerned, people are still reluctant, many of them, and there's a huge gap. I mean, just look at the difference. You talk about 3 billion plus of transactions on the VC side in US, while you talk in 2018, and you're talking about only around 890 plus million dollars worth of transactions on the VC side in the Middle East. So you can see there's huge potential of development. But there's another reason that you see a slow movement, because on the startup side, there is a lack of market intelligence. Now, as I mentioned, there is a lack of the number of incubators and accelerators which are here in this region. So the startups that you have over here sometimes lack the market intelligence, sometimes lack new ideas. Execution capabilities are sometimes not I mean, near to its non-existent. So that is one of the reasons that we as ASA Ventures, the way that actually we developed, which might not have worked in the West and the US, but it actually works so well over here, is the VC 2.0, which is a model where we are developing this industry in this region. So VC 2.0 is basically the way that we help the companies we invest in. It's a hands-on approach by giving them access to vital resources like strategic support, professional expertise, be it marketing, production, development, so on. Actually making sure that these companies reach to that point where they are a success. So we do know those pros and cons, but even knowing the cons, and we're trying to fill the gap by actually providing that support directly to these startups.
Well, that's great. It's good to see additional services going out with the funding to make the company a much greater chance of success. About half of our listeners are investors, and we always like to share with them advice about how to invest in early stage companies. So, for those who are wanting to invest in startups today, what would be your advice to them?
Well, if they're already in the VC world, then great. If somebody actually wants to move into the VC world, then definitely there's some expertise that you need to develop. I think being open-minded and having a risk appetite is the first thing you need to have. Be well aware of the challenges that you're going to face, the changes in the market, what are the gaps, what the consumers want, what can potentially be the next big thing, and base your decisions on data rather than assumptions. I mean, this is something which we come across every day when new ideas pop up and there's startups pitching to us. And the ideas and whatever their plans and business plans are based on their own personal assumptions rather than actually having it solidified coming from the numbers. And that's also one of the things that we ASA provide to our startups. We have one of our data collection company, and on that we have been collecting data since last 16 years. So every detail decision can be taken on that in terms of marketing, sales, or whatsoever, and the entire marketing and strategic plans can be developed on that. So that's one of the things that you need to remember is data is very important. And it actually sounds very interesting, and sometimes it's not that easy to be a VC. Sounds interesting, but it's apart from the experience, expertise, and skills, it also requires a different mindset compared to the conventional school of thoughts. I mean, there will be failures on the way. So my advice is that before someone wants to move towards becoming a VC or actually grow in that side, you need to be carefully assessing your own self and your own risk-taking capabilities, which is a very critical action.
Well, that's good advice. So you've been an investment banker and you've been a VC. What skills do VCs require that the investment banker position did not?
A very relevant question. I mean, just the investment banking experience is not enough to be a VC. I mean, investment banking usually it's an important thing that you need to understand is Investment banking usually focuses on results based on historical performances. Even the investment decisions can be hedged against a buffer of to mitigate risks. The whole concept is about trying to provide the highest returns possible on a minimum risk, which again puts restrictions to the upside. In the world of investment banking, there's ways to secure your returns, but the possibility of losing out on exponential returns are high as well. So comparatively, in the VC side, the investments are very dynamic in nature. The risk profile is extremely high and wholly dependent on whether the startups function well in the market or not. So there is more to just past performances in VC investments. You have to know the market inside out, along with understanding the product in depth, the consumers and their needs, the various possibilities. So someone who has a combined experience of investment banking, which definitely supplies the financial decision making skills, but having an additional expertise, which is like having something like a business consultancy experience, which is which gives you the skill of actually strategizing and understanding the very core of a business, then you are actually quite close to being having that mindset of VC, because on the financial side you're making the right decisions, and on the other side the business operations is something that you know how to operate and get better. So again, it's for me it was a great experience because I was not only in the investment banking but also was in my previous career was also involved in strategizing rehabilitation of companies for corporates as well as SMEs. So it actually blends together and makes it easy for us to take it forward.
Great. So as a VC, how do you spend your day? What activities and are you putting in, and what's different from the investment banking world as a VC?
So, okay, typical day for me. Well, very difficult question, I would say, because every day is very different. Every day is a different routine for me. It involves coming across numerous business opportunities on a daily basis. Sometimes making sense, sometimes not. Sometimes it's entertaining as well. But most importantly, it's a learning experience. I get to learn something new every day. It also involves a lot of traveling because obviously we are meeting and have a lot of investors who support us. So meeting new investors, startups from around the world, constantly hunting the next opportunity, connecting with the right people who could be potentially the next future partners, going to conferences, meeting with the relevant partners or third parties could be. And then when I say partners, because ASA has a model where try to provide most of this support, we always also looking into having the strategic partners such as the technology partners and even the legal side of it, even the structuring and so on. So that said, it's not only the work setting. Something different is definitely I have a pool table in my room. So sometimes a brainstorming session happens on the game of pool. And and at times, I like to step out into new settings and sit on my laptop to develop some strategic plans, expansions, different structures, which may work in line with the ASA's overall philosophy. So, yeah, so I would say that every day is quite different for me.
Well, that's great. So what would you tell someone who wants to be a VC, what to expect and how to prepare?
Yes, as I mentioned, being open-minded about it. I mean, you have to carefully assess yourself if you're ready for it to be a VC, and if you have the capabilities of taking that jump. Because, as I said, you will be losing out. There will be times when you might not get what exactly you want to achieve. But the most important thing is when you want to be a VC, the diversification is the most critical element that you have to have. The diversification in terms of sectors, segments, and and the regions as well. And not only that, but has to be coupled with the smart investment decision that you have together with that.
Well, that's very helpful. So in the last few minutes that we have today, what else should we cover that we haven't?
Well, one thing I definitely would like to add over here, I think I mentioned in the beginning. You see, when you're talking about the VC world over here, there's a huge comparison, and I did mention the numbers to you as well. So when you see the West in terms of the Europe and the US, you have another biggest region over here, which is the GCC, the Middle East, and connected to the Middle East is the emerging economies, right? Middle East, I mean, especially Dubai, is basically at a very strategic location where it's easy to access countries like Egypt, India, Pakistan, Bangladesh, African countries, and similar economies. I think international VCs should focus on extending their focus to Dubai and onwards from here. I mean, it's a gap which I mentioned to you. So there's a huge gap in VC funding, which needs to be fulfilled. A small example is if you're talking about the emerging economies, if you go and study that, the banking returns are recorded to be highest in the developing nations. And same is said with for the private equity returns, even the venture capital deals, even though the volumes of transaction at the moment are low, but which also means that there's a huge potential of people who are very developed and the VCs who are very developed in the regions to actually explore this side of the world. Saudi is a great country which is coming up right now. It's transforming itself at a great pace. I mean, in terms of digital adoption, the VC and the foreign investment support, the startup incubation and acceleration. I mean, the initiatives which basically this region has taken, you just take UAE at the moment. UAE is number one in the region for VC investments, and the country is focused taking its startup ecosystem to new heights. The smart city initiative that the government is taking, the blockchain interests, and so many things which actually form the part of the national goal for the country. I think there's a great opportunity for startups to move in this region. Another endorsement, I would say, is something which we tried, and it's actually something which we are very proud of, is we actually launched a 7-day challenge series on our YouTube channel as well. And where the whole concept was where we turned a startup idea into a revenue generating business within a week. And it's actually shot every day. And which means something is like this is possible in this part of the world, and with our support as well. So, I mean, there are a lot of things which are coming up, and it's a great region to start off with. I think this is the right time to be in this VC space in this region, and definitely the right time to invest in startups.
Sounds like a great opportunity. Well, how best for listeners to get back in touch with you?
I am actually on the LinkedIn by the name of Danish Rizvi. So anybody who wants to actually connect with can add me, can actually drop me a message. I'm always quite responsive on that side. So anytime who wants to reach out to me, I'm always available.
Well, great. Well, we'll put that in the show notes so people can get back in touch with you. Thank you for taking time to join us today, and hope to have you back for a follow-up soon. And it sounds like you're doing great things there. We appreciate your work.
Yeah, thank you so much. Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.